late start because I didn't press the button. My apologies for that. Anyway, I've taken a few people by surprise, and I've got to say I was surprised. I thought that the London daylight saving actually occurred in 2 weeks' time. That is not the case. It did occur overnight yesterday. So we are in a situation where we are now starting 1 hour earlier for most of us. Those of you, of course, in the UK, that would be Ash. We're starting on time because London is now open. I am looking at this gold trade and seeing that the high of the range is the high of that bar. Low of the range is the low of the previous one. Oh, am I on an hourly chart? Yeah, I am. Is the low of the previous candle. So we're looking to break short here, long here. One cancels the other. Target for the long has to be the daily pivot. Target for the short, DS2, we'll just use the pivots. All right, we'll set the short trade. And the level is low 1966.61. Let's call it 1966. 1966. My goodness, everything's all over the shop here. And the stop loss is the high of the range, which is there at 1979. So 1979 will be the high. Target for the short, DS2, which is 1956. My goodness me, had to happen eventually. That's the year I was born, 1956. Okay, short is in place. The long will be, actually we'd rather go short, wouldn't we? So there's a better reward there for us. In fact, I'm on board with that. Rather see it go short. The long, let's place that order. Buy stop at, how could I forget it? 1979. And stop loss at 1965, was it? 1966. 1966, and take profit will be at the daily pivot, which is 1985. Right, there we have it. Cool. Righto, we've got Swee in, and we had Lewis in. Lewis has disappeared. No, he's back. He must have lost his connection. Righto, I need to find out if we're going live to YouTube. And yes, we are. Thank goodness for that. Righto, everyone, let's settle down and see if we can actually get a move on here with something that means something rather than all the waffle I've been going on with for the last 5 minutes or so. Yes, indeed, Tajul. The reason for that is my fault, and I'll blame Ash too, because I thought that UK daylight saving started in 2 weeks after Australia, which comes off daylight saving next week. I was wrong. UK daylight saving started yesterday, and therefore, because we like to capture the London Open, we have to start 1 hour earlier for most of us. And of course, that includes myself and everybody in Singapore, in Hong Kong, and everywhere that's not London or the UK, really. So my apologies for that. That has been rectified now, and you should get notification that the show will now start at 5 minutes to 8 UK, which is 5 minutes to 3 in the afternoon, Singapore and Hong Kong, and 5 minutes to 6 if you're like me and are blessed to be in Australia. So there we go. That's going to be the case until October 29th, I believe it is, so won't change for a while now. Righto, gold trade is set up. As usual, one cancels the other, and as usual, very, 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 very low stake involved here. Righto, so let's move on, shall we? I've updated this dollar CAD. Those of you who weren't in when we started, and I'll probably be doing a little bit of this repetitive stuff due to the fact that most people will be joining us an hour late. Where are we? Entry here, stop loss here. We're about midway point. What would I like to see? I'd like to see this disappear underneath here, of course. At the moment, you've got to hang on, I suppose, because you've got that beautiful rejection bar from Friday, which was preceded by that ugly rejection bar from Thursday. So we're actually bang in the middle of that. It's a very, very indecisive market. I think if I got to close above the daily pivot, I would get out of this and cut my losses, which are not substantial because it's very, very low stake in here. Righto, let's go and have a look at the weekly game changers, shall we? Weekly game changers begin with Aussie CAD right up the top. There's the weekly chart. And we have I won't say it's a confused market because it does look to me as though this does want to go lower. The thing that I can see clearly, however, is a left shoulder here, a head here, and a dip. I think we need a right shoulder up here around about the monthly pivot area, or even a little bit above that if I am to think about going short here. So that's kind of where I'm at. Yes, I agree with the direction ultimately, but short term, I do not. I think there's room to go to the monthly pivot here. And if that's the case, then I don't want to be going short right now. What I would like to see, of course, is price actually hit that monthly pivot tomorrow, Wednesday, Thursday, don't care. And if it did that, then I would be looking for the short. But at the moment, I don't think I want to trade into this level here. It's a pretty strong level. If you look at that a little bit wider, you can see that level's got history. Support, support, resistance here, resistance here, resistance here, support here, support here. So I don't want to be trading short at the moment. Yes, I can see that we've got potential reversal, potential lower high, but it's just not in the right place for me. If that was a shoulder, then I would be looking for the short off that bar, but I've got to wait for that. So Aussie CAD's the first of them. Aussie Swissie's next. Also suggesting that we go short. And of course, this one comes with its own set of problems, but dissimilar. Well, not dissimilar in one way because the monthly pivot's untested, but dissimilar because we are at a strong resistance level. And going short here makes perfect sense, except for the reward to risk available. So where's your risk? Your risk has got to be at minimum above the daily bar, the weekly bar from last week. And if your entry's here, and you really want to trade through those lows, 166 of risk and 23 pips of profit doesn't make sense, does it? Because that's where that's where your support level, your first support's going to be, and you'd be expecting a bounce there. Well, that would be probably the better way to trade this, in my humble opinion. Wait for price to get up here, get the reversal, then trade it short, giving yourself room to take profit in a meaningful fashion before those lows. So it doesn't make sense. Then move on. Aussie versus the dollar is very recent. This is just a cut and paste, isn't it, really, at the end of the day? Big reversal bar, game changer bar, phase one, phase two, phase three. Do I want to pick up phase four? Answer no, certainly not from there. Am I saying it can't go short? No, I'm not saying that at all. But what I am saying is it's the same story. Untested monthly pivot, where 3 days, 4 days from the end of this month, and this is a phase four move. If you look at the daily chart, you can see that more clearly. Phase one, retrace. Phase two, retrace. Phase three, retrace. We've already had phase four, if you count that little move in there. So I don't want to be going short here. Love the candle pattern, looks fantastic at a nice level, but we've already had that push down. We're at a support level in terms of there's a channel running through here. I can't see myself going short right now. Can I see myself going short at all? It'd want to be a clear lower high off these tweezer tops for me to do that. But then I've still got that in my mind as well. That's the untested monthly pivot. So not really prepared to go on that evidence. The next one is my old favourite, or has been for the last few weeks, Canadian dollar versus the Swissy. And the Canadian dollar versus the Swissy just keeps refusing to rally. That said, look at the double bottom that is forming here on the monthly chart. Maybe we need to wait for that to happen and trade it on a monthly higher low, which will happen in about November, by the way it's going. It's so tough to catch this one, but I know it's a very, very strong potential to go and reverse here, at least in my humble opinion, up to here somewhere. And that's why I'm so keen to get in, because I think there's some excellent reward available. Just got to find the timed entry, I suppose. When that is, can't tell you. Wish I could. But I'll continue to watch it. And candles at the moment are telling me to go short. Won't be doing that into that big double bottom. Doesn't make any sense to me. And if I'm thinking about how I get into the long, well, there's a candle there on Friday on the daily chart, which is entirely possible, could go long from here. Is there a problem? Yes, there is a problem. The weekly pivot. Where's the daily pivot? Down here somewhere. Okay, that doesn't look too bad, because we are above the daily pivot. 4-hour retest of the daily pivot does get me interested here. Not the worst, not the best. Gosh, I hate gaps. Gap closed dramatically, of course, earlier in the day. Had a retest, but not back to the daily pivot. That's annoying. That's what I'd like to see, a retest back to the daily pivot. And maybe, just maybe, if we look for this false break, which may well be there right now. Too messy. Double break here. Don't like it. But it does give me a nice confluence area, I've got to say. That's why I hate gaps. Had that come back to here, I'd be interested already. But I'll be watching this very, very closely. That's CAD versus the Swissy. And as you know, I've been trying to catch hold of that for the longest time. Still on the watch list, and I'm still keen. Next one is Euro versus the Swissy. Now, this is just one of the hardest things to catch as well. It's not as bad as dollar yen. Hey, Lewis, I had a win on dollar yen last week. You'd be pleased to know. That was pretty cool. Been a long time between drinks, I must say. This is kind of suspended in midair, in my humble opinion. Yes, I can see the potential for this to reverse. Yeah, it was great. But where's it reversing off? Where's the support level? We're missing something here. and it's called support. Yes, that massive bar from 2015. Well, to me, it doesn't have a mystery level, if you like. The level was up here, and that was broken and retested. We spoke about that level length at the time, going back months ago, well, probably a year and a half ago. But since we've broken that, we've gone into a steep decline. So where's the support level? It maybe has to create support, in my mind, to be able to think about going long. And I just don't see that right now. So Euro Swissy, despite the fact that we do have, actually, is this the worst? I think it is. Like I said, there's no support. So it's going to have to create its own support. This could well be a trade. Do I dare trade Euro Swissy again? That bar there. Let me see. 155 to 40. No, that doesn't make sense either. Reward to risk is up putty. But I can totally see that this needs to have maybe that's the support. We've had a bullish engulfing bar. Now we've got okay, I'm staying out of the short. Convince myself that's not a good thing to do. So let's leave Euro Swissy and move on to, there's only a couple left. And I see Ash has joined us. We'll go to Ash in a tick. Pound versus the Swissy. Let me select it. There it is. Tough one. Strong support level once again. Reversal bar, yes. Game changer bar, yes. Has cleared the monthly pivot and retested it and closed on it. Gee, they know how to confuse you, don't they? These price action people. What do I see other than that? Well, there's a potential for that to become a false break also messy. Too many breaks, too many closes above and below. Directional bias. Look, I think tomorrow this will look a whole lot better. And the reason I say that is because we've got some resistance coming in. So what I'd like to see is a bull bar come up and hit that level. And then I can consider the short. At the moment, I can't because of all those things I just discussed. But it does seem to be, to me, the likeliest of directions, and that is short. Just got to catch the right entry here, and down to the bottom of that range makes perfect sense. So pound Swissy is on watch, but there's no trade there at the moment. Kiwi versus the dollar is the last of these game changer bars for today or for the week, and it's suggesting that we do go short here. Definitely got the look of a compound inverted head and shoulders here. Is it tradable long? No. Is it tradable short? Again, reward to risk is not fantastic. You've got to get your stop loss above here, so your risk is there. That makes it 130 odd pips for 30 in profit before you hit support at a strong support level, which could indeed be, in fact, that right shoulder that we're looking for. This looks to me to be in a bullish frame of mind rather than a bearish frame of mind at this level. So, again, that's a no from me. I'll bring Ash in. G'day, buddy.
Hi, mate. Things good?
Things good. I've got a few on my watch list, which I haven't yet been through, but I'll go through those a bit later because they're not, in fact, they're the only things on my watch list. All the above are not at this point. But they've got plenty of time to discuss those. What's going on in your world? Is there anything that we need to take notice of at this point?
Yeah, a couple of things really. I mean, you're well done for the winner, by the way, on the Euro dollar
Thursday
last week. Yeah, great winner that one. Yeah. But yeah, there's a few things to take note of. You know, the first thing is that the market's opened up relatively happy, and I think that there is a is probably some longs to be had. We'll have a look through the charts and see what we got, but it does look like there are some bullish opportunities as we open up this Monday morning. So let's do this.
And of course, I'm surprised there are actually people in the room, because we are an hour earlier outside of your United Kingdom.
Yes,
and
we are indeed.
We forgot to tell people that. I forgot. I thought it was actually 3 weeks from now, but obviously I was wrong.
No, I think we did. I think we did mention it. I think we did mention it.
Oh, did we?
Yeah.
I must have been asleep.
So the first thing is the FTSE 100, which I think is a decent buying opportunity. It's trying to find the right levels for a target. You can see Friday's bar was actually ended up to be relatively positive. It was a bearish bar, but it did manage to kind of create some support down here and fly up. And because this is looking like the previous break, it's really got to hold above this level here. It might well have been just testing this bar, but the fact that it closed above this bar, it would have been better if it closed above this level here, but it didn't quite manage to do that. But it looks relatively bullish here, and I think a push into this area, probably maybe a 40 pip run to the upside is on, but it could be better than that if things just calm down with a narrative about what's going on with the banking situation, and that's really what's driving the market right now. And if you look around the grounds and see what's happening, really as we opened up, really this so far this morning, Aussie did actually start pretty well, and I wonder whether it can end up holding this these gains. And if it can, then that's suggesting that the Aussie is going to be going higher as well, early doors. But I think where this becomes interesting is that the COT data has finally been reported. We've been waiting for about a month now for COT data.
Wow!
Finally been, yeah. So it's finally come out, and we got this. We got the COT data, which is actually suggesting that the Aussie is probably the weakest of the currencies, and the dollar is probably the strongest. So I think that's quite interesting to start with. We've also got a week of Australian data, which would suggest that if there is a reduction in inflation, which we have seen in Australia, just a kind of snowball of a reduction of inflation, then the Aussie dollar could also suffer. Now that is later in the week, so we might get an initial bounce, but really probably looking for Australian dollar, Aussie currency shorts. So a little bounce to the upside might be of use to some people. This doesn't look so healthy, a breakdown, and maybe that short is on already. And if you look at the Aussie CAD, that looks quite similar.
Said similar to that. It does potentially look as though it's there already, but yeah, I think a little pullback to the people might be interesting.
Yeah, well, this is the level that we've probably got. It's somewhere along here, isn't it? The 2 touches is not great, but looks like it might well be under that level now, actually, mate. So the Aussie dollar might well be a trade. Sorry, the Aussie CAD might well be a trade short. And as I say, that's what the data is kind of suggesting, that we do get Aussie CAD shorts. So this hourly is the one to watch for me. If I can see this break down and come back and test, then I'll be taking it short already. If not, then I'll allow it to go and see if I can create it somewhere else. I want to see this in a move to the downside, which it might. You could argue it has already, and maybe on the longer term timeframes it does look like that, but it's getting a little bit extended for me down here, so I wouldn't want to take it on just yet. The other currencies that don't come up that hot are the yen. So Aussie yen wouldn't be something that I'd want to trade. And actually, this looks like it might well have started to move into positive territory. I also noticed the Aussie Sing was looking quite attractive as well for some upside, now breaking through here. So there's a few that suggest the Aussie might actually start the week positively. And there's a few things that suggest that actually the risk on equities might start the week positively as well. They're not doing so well right now. Just starting to ease back down again. But and if we go back to the FTSE, you can see it easing back down again. But I wonder whether we might just have a little bit of a pickup today. Looks like we're just on this trend line here. It looks like the area that needs to continue to hold, and if it does, then I think we could actually, as I say, maybe just have a little bit of a relief rally. But that might be all it is. You know, all we might be getting this morning is a relief rally. We might not be getting too much more than that. But I'm going to watch out for it, mate. So I'm looking for FTSE longs. I'm looking for the Aussie to turn around. I probably wouldn't go Aussie long because it is on the watch list for the short side of it. So I'm looking for the Aussie to turn around and look for a short in the Aussie. Best against the dollar, but the CAD also starts to come into play with that as well. The euro is going to be difficult because I think, you know, we've got some data which does kind of push us towards how they are reacting to the banking situation. Last Friday, Lagarde said she wasn't worried about the banking situation. Over the weekend, some Fed officials come out and said the banking situation is the thing that's likely to push the United States into a recession. So there's kind of mixed. There's a bit of a mixed sort of bag going on right now, and I feel like there might just be a little bit of waiting as things progress. HSBC, the biggest bank in the UK, is up 1% this morning. So it's kind of suggesting at this stage anyway that that there's just a little bit of relief of pressure as we go into the start of the week. But it is only the start of the week, and that could change quite quickly. No major economic data due for a while, actually, not at all this morning. But the one thing that I'm watching out for today is the M3 money supply from the euro, from Europe. And the reason I'm watching for that is that the M3 money supply is obviously to do with the amount of cash in the system. And since we've had this quantitative tightening situation, it has been reducing. You know, after sort of producing lots and lots of euros, lots and lots of currency, it had been reducing. But because of the banking situation, they've had to start taking maybe slightly different measures. So I want to see if there's a tick up in that particular number, because if there is, then it might suggest
they've kicked the euro printing machine in the guts, same as the Yanks have they? Is that the idea?
They might.
To keep the banks afloat?
Yeah, exactly. So the M3 supplies the domestic currency in circulation and deposited in the bank. So it does have a kind of direct correlation to the banks. So, and as I say, that's been declining. The M3 money supply has been declining since March of last year. So do we get an uptick in that number? We had a couple of sort of wobbles on the way, but generally speaking, it's been declining. But do we have an uptick in that number? Because if we do, it might suggest something of policy. You know, it's not really a number to trade off on its own necessarily, but it might just give us a little indication of policy and what they're thinking to do with this situation that we have.
Okay. Again, I'm getting completely mixed signals from both of those scenarios. We spoke about that in the States last week, where, you know, they keep that money printer going. There's only one thing I can see down the track for that, and that is US dollar disappears at some stage.
Yeah,
which is good.
Yeah,
I've held that belief for a long, long time. So
yeah, it's not looking good.
Just hope I can take advantage of it when it happens. But I think for this week, I'm a euro dollar bear, so I don't know whether that's a dollar positive thing or a euro negative thing, but that's what I'm seeing.
Yeah,
I
would go along with that, mate. I think maybe sort of the dollar actually, you know, it is showing some pretty positive metrics. The COT data doesn't look great for the dollar, but it doesn't look awful either. It's low, but it's leveled out when you look at the buying. And actually, the buying is still quite buoyant with the euro. So the COT data doesn't push us towards that currency pair. But when you look at the fundamentals, then the dollar's got some, you know, inflation numbers this week, and they haven't suggested they're coming down. So if they do remain buoyant, then you'd expect some dollar buying, some further dollar buying. So I don't think it's the worst trade in the world to look for.
Did you say the COP data for the yen was bearish?
Yes.
Okay, because I've got dollar yen rallying at the moment today, but it's coming off a strong level. And it's at the bottom of a channel as well. So maybe that's where I need to be looking as well. My new best friend, dollar yen.
Yeah, maybe so, mate. Maybe so. The currencies that come out the weakest right now, actually, the growth currencies, the likes of the Aussie still look weak. The Kiwi looks weak. You know, sort of things like that aren't looking great. So yeah, you know, there's a bit of balancing to go on probably.
Precious metals, mate. What about GOLD?
Yeah, well, that's
Where's
an
that?
interesting one. That's an interesting one because what we got down here is this gap. Now, obviously, with the dollar strengthening, it would suggest that gold should come down, and this has been subject to the banking scenario. We got this double top kind of going on up here as well, so there's a suggestion that we could start to get just a little bit of downside. The $2,000 mark is obviously a significant round number, so you could see, you know, why people would maybe start to take some profit in this particular area. So I think GLD could be of interest. I think that, you know, we could start to see some downside in this one as well. If the dollar narrative does strengthen, then obviously that would strengthen the case for this. But this is probably going to be to do with the banking scenario. You know, if we don't get a relief in the banking system, not really any reason to sell gold. But if we do, then we could probably see gold start to come down. You know, even with the inflation data where it is, I think a lot of this move is probably because of fear. You know, people sort of like wanting to put their money in a slightly different place, not trusting the banks, which is one of the reasons that Bitcoin rallied so hard. I think because of the confidence in the banks. So if the confidence comes back in the monetary system, I could see gold actually easing back down a little bit, but where it goes, I'm not sure. Still a decent case for buying gold, but you can see, you know, this level is really significant. Not the absolute when I look at this level over here, which gets us to around about 2070, but 2000 round number. There's some closing levels here. Which we're testing right now. You'd think a close maybe near or at this level there, but parabolic move does suggest that there's probably some easing back down and some profit taking coming.
Remember that thesis, I suppose, that Phil showed me last week regarding the fourth push on gold. This could be the third retracement. This could be exactly what we're looking at. If you've got a buyer, you know.
I don't know about that one. What's the fourth push on gold?
Strike one, strike two, strike three, perhaps. Maybe we haven't got a strike three. I think on the weekly chart, if you go back to the weekly chart and have a look, I think you go back to
this is the weekly, yep.
Yep. 2001. I think was the first attempt.
Oh yeah, I do remember you saying.
Or the first demonstration of this, yes.
Yeah.
So it took the fourth push before it broke the level.
I remember you saying, yeah, gotcha.
And same again in 2008-9, I think it was. Again, a significant period of time, and it took 4 pushes to get through. And I think we've now had 3 attempting to break that level. So maybe we are looking for a pullback here at the moment.
Yeah, I like that, mate.
Yeah, it's interesting.
It is.
I hadn't thought about it myself, but
sorry, man. I'm just looking at this FTSE and seeing if there's a trade. If this bar closed here, then I'll be interested in taking this on. We've got a little while actually. We've got about 10 minutes. 10 minutes before that push. Sorry, mate. Sorry.
No worries. So yeah, that could be one to watch. That gold retracement if it continues as it is at the moment. But it needs to be deeper, I think, than what we've got at the moment. There's nothing really there to suggest that you want to sell it. That's for sure, as you said.
Lewis said he's looking for short gold and long on WTI. A long WTI.
Look, I like the thesis that if we are going to get that retracement on gold, it needs to be deeper than what we're seeing at the moment. So I'm on board with that.
Well, what's interesting about that actually is that if gold does start to ease down because of the banking situation, you'd think that this would ease up. So they could be quite correlated, those two trades.
Sorry, mate, I was doing something else. Say that again.
They could be correlated. The trades could be correlated. If gold eases down, if we do see some easing in the concern with the banking stocks, we might well see WTI actually start pushing higher. Because of so that there could be something on for that. There could be something in that.
What are you seeing, Lewis? Is that an early wall of worry that we've just come back off, and you're looking for that as an aversion point? Not sure that's the case, but maybe, just maybe. I think dollar yen was in that category, and we spoke about that last week or the week before. I can't remember quite when we spoke about that, but I think we are potentially at the aversion point on dollar yen as well.
Yeah, we could.
Have you got that chart, mate? Do you want me to?
Yeah, you take it for a minute. I'm just a little distracted by this FTSE.
All right, I'll go through this and you can sort that out. And if you've got a trade, then we'll find out.
Great stuff, mate. Okay, amazing.
So here I've got dollar yen, and this is what I was speaking about. If you're an aficionado or take any notice of the sentiment cycle, this is, well, I won't say it's a replica of it, but it's pretty damn close, where you've got all of this selling coming in. And let me pull up the sentiment cycle, just for those of you who don't know what it is. I think I've got it here somewhere. Maybe I haven't. Sentiment cycle. No, I don't. What a shame. Actually, while we're here, I'll have a quick look at this. Pound news tomorrow. GDP figures from the States on Thursday. CPI on Wednesday out of Australia. There's not a whole lot outside of those. Sentiment cycle. I haven't got it. What a shame. Never mind.
Well, what is it? You want to chart the sentiment cycle?
I just wanted to compare it to this chart because it's not far out. The one thing that is a little bit off-putting is this rally should have come up to here, I believe. Then the sell-off, then the wall of worry, then an aversion point. But this looks very, very close to an aversion point to me. It's certainly a support level. There's no question in my mind that we're at strong support. And there is that level right there.
I mean, do you know, mate, the other thing I'm also just forgotten to kind of mention is, of course, we are at the end of the quarter. So there are sort of other sort of things at play at the end of the quarter. And I don't know whether you noticed this in trading, that things don't necessarily sort of shape up quite the same way during this particular period. End of the quarter, end of the month, end of the week, all happening on Friday.
What I should say in answer to that question is, yes, I'm an absolute student of it, mate. But the truth is I'm not. So, no, it doesn't affect me greatly. And like I said, I should be aware of it. And I guess it being on Friday, it's out of my control anyway, because I won't be trading. Maybe I should be. You're suggesting that I should steer clear, or I should have a crack?
Well, do you know, this is something that I'm wondering for myself. You know, so if you've had a positive month, is it one of those weeks that you kind of you think, well, actually, there's something else at play which is outside of the data, and outside of the news, and that is fund managers, balancing certain books up and sort of, balancing positions. So does that kind of play a part in how things move the market? I mean, like you, mate, I haven't done anywhere near enough research on it, and anywhere near, how it affects my trading, not sort of how it affects the market necessarily, but I haven't done anywhere near enough research on it. But I just wonder whether it is something that if you're actually up on the month, it's better to avoid. But if you're down on the month, that it could be something that you trade slightly differently, but does actually create slightly better opportunities. Because really, the last week of the month tends to be sort of just a little bit more volatile, and I tend to quite like it. And I would suspect it's probably when you get the last week of the month, last week of the quarter as well, the volatility could pick up substantially, which really for short-term traders is food and drink. That's what we want, isn't it? So it could be a better time to trade, really, if you get on the right side of things.
Lewis is suggesting that I should have some wine and beer, relax and watch the market.
Yeah.
Have you got a spy camera in my house, Lewis? Because that does sound like Friday afternoon to me.
Yeah.
I've got to say. But my point is, anyway, that this is at a strong support level. And not only that, yes, I can see the potential for the bull flag, and that can break to the downside, no question. 1, 2, 3, big retrace. Do I want to trade a fourth push down on this? Or can I see that happening? I actually can't at the moment. And the level at which we find ourselves couldn't be clearer to me that that's strong as a buy zone, without doubt. And what I'd like to see happen, maybe not on the 4-hour chart today, but on the daily chart, even if I've got the 4-hour chart's not applicable to this trade line, you see. If I saw, however, on the daily chart on Wednesday morning, why Wednesday morning? Well, it could be Tuesday morning. If price is able to close where it is now, or even on its high, or even a little bit higher, that's fine. Then come back on Tuesday, tomorrow, and retest that area. Wow, I'd be all over along here on dollar yen. I think I'm patient enough to wait for that. I don't want to jump in now, but to my mind, dollar yen is, if you combine what I believe to be a good facsimile of the sentiment cycle with the level that we sit at, it's a great confluence areas. Even if you don't like the channel, this is a trend line. It's a trade line. There's strong support here. We're climbing back above that confluence area. A retest of that for mine is a buy signal. So that's definitely what I'll be looking for on dollar yen. My new best friend, as I said, having had one win in 5 years on it. The other one that I do like is euro dollar. Now, this is a far more complex chart that I'm looking at here. It's not quite as simple as dollar yen, but it'll be very, very similar in nature, without question, because euro dollar is a facsimile for the dollar index in many regards, not directly, but very, very close to it. And I've been screaming this out for I don't know how many months now. But when we hit this level, the backside of that trade line, which was a trend line at the time, has been rejected out of hand. And since that time, the euro versus the dollar has been under pressure. On the weekly chart, you can see that we've tried to come back and have a second crack at getting above that level. And for the second time, it failed out of hand last week. Am I prepared to trade that bar short is really the only question that I needed to ask myself this morning. And I came up with a resounding no, because I'm trading straight into that support level, which could, in fact, be a right shoulder of an inverted head and shoulders, in which case that neckline, which has been rejected twice now, is still in play. So what I'd rather see is a pullback that fails to take out that high. And the daily chart could well provide that. You can see with my broadening price pattern that we've come back underneath that. We've also come back underneath this recent support and resistance area. I'd love to see a retest of that, which would give me a lower high. Even a retest of the trade line. Well, it's not a trade line, but it's that broadening price pattern. A retest of either that or that does get me really interested. I'd prefer that, and I'd prefer it to happen today, because that would give me a very, very clinical and precise and concise way to get into the market. If it came back up to here, then it creates its own issue, because I'm then trading into a support level without taking profit. But I'm pretty keen on this. It just needs to set up for me. I do like the pattern. I like the structure of the market. I like that we've got a big reversal bar here. We've come back to retest that level on which that was a false break. So this level here, rejected it, back underneath the horizontal level. As I say, a retest here. And I'm short like a shark on a mackerel, as I say. They're the two that I'm most keen on. Let me check the gold. Did we get triggered on gold? No, barely didn't. So that's still in play. Today on euro dollar, what do? I think our edge has been erased, and erased quite dramatically. The edge, of course, being the untested nature of the daily pivot, which happened again on Friday, untested. But then on Thursday, of course, we put that nice little short underneath that bar, looking for that test, and it arrived very, very late in the session, in the US session. But that's, gee, I wish I could actually draw a picture of this most times, going back 10 years or so. This would just happen with monotonous. Well, it wasn't monotonous because we were making money from it, but every time you saw that, it was just like taking candy from a baby. It's not the same anymore. It's not like taking candy from a baby. You've got to work hard at it. And as you can see, price came back and nearly hit the stop loss, which was above the red bar, I think, but it didn't, and target was hit. So it's a lot less reliable than it used to be. But if you see that after two non-tests of the daily pivot, you're pretty safe in taking that as a reasonable risk. Today, as I said, we've had the daily pivot not tested once, twice, three times, just ridiculous. So that's where price wanted to stay until something happened, and that something appears to be UK Open. Why? I have absolutely no idea. The market's just saying, okay, we want to test these lows, I suppose.
Yeah, so FTSE's not healthy at all actually at this stage. I'm still quite interested in the long, but I'm watching it like a hawk, mate. I'm still here, but I'm watching it quite closely at the second.
I'm sure. So really, it's tough to trade that right now. Had we not had, and I mean this is complete waste of time talking about it, but had we not had a test of the daily pivot today, and we got that bar after we did, then I'd be more than happy to look at trading it. But the truth is, right now I've got no idea what direction this is going, and nor did the market up until, well, just about 10 or 15 minutes ago, 20 minutes ago, in fact. Do I trust this as a short? Answer, no. Why? Because the market was so indecisive at this level. When I see price away from those pivots, and it comes to it as a result of trading, not as a result of all this garbage in here, which is just noise, then I can have some confidence in it going either through it or off it. At the moment, when price is just like this, really all we've got is an impulsive move from somewhere at this point. It could turn into something, no question, but I can't rely on that. It's not giving me the price action that I need to see. before I actually take action. So that's not there at the moment. This could well just oscillate, around those pivots all day long and all evening long and all night long until tomorrow. And that wouldn't surprise me one little bit. So there's no trade for me there at the moment. Couple more that are on my watch list, and they both involve the pound actually. Pound versus the Aussie was the first of them. We're still waiting on that trigger. Oh no, we have been triggered. We're short gold, and that's not going real good at this present time. Okay, I'll keep my eye on that. Pound versus the Aussie. Sorry, mate.
You short gold, are you?
At the moment, unfortunately,
because
yes.
of the open. Yeah. Oh, I think
because
that's okay.
Because of the breakout.
Yeah.
Just pound Aussie. That's where I was going. Why pound Aussie? Well, it's exactly the same reason as Euro Aussie, as Euro Kiwi, as all of these things that are at the top of my market structure, which is, in all of those cases, a broadening price pattern. And it's just like any other market structure. There's no difference. When I see it, I'm expecting price to do exactly what it's done previously, and that is when it hits the top, come to the bottom. When it hits the bottom, go to the top. Hasn't done it for 2 shots now on this broadening price pattern. If you have a look at the confluence area, however, you can see why I would be thinking short here. Yes, I've got the broadening pattern, but I've also got strong resistance, strong resistance, strong resistance, strong resistance, support. I've got these things in the road, and I can't see any further, but you can see throughout time, this has been a strong level. Why do I think that would now break? It could, absolutely could. If you want to throw in just one more confluence, you could put that in as well. And what I'm waiting for is price to duck back underneath these levels. And if it does, then I've got to trade. That's pound Aussie. The other one is pound versus the CAD, which of course is not dissimilar, both against dollars or commodity currencies, if you like.
Actually, the pound CAD, I also thought was quite. Are you looking to short on that as well?
Yes.
Yeah, I was looking at the pound CAD as one of interest. I don't really sort of, I don't see anything just yet, but it's close, isn't it? It's just got that cluster of price action that I'm looking at on the hourly. Same on the 4-hourly, actually, just a cluster of price action which is holding it up. But the 15 suggests it might be going a little bit higher first.
Well, it's the same as pound Aussie in many regards. But the most obvious thing here is this level that we're currently at from a horizontal point of view. Why is it going to break through there suddenly after all of this, support that level's been broken back underneath it? Now we're retesting it for the second time. Maybe that's a clue. Maybe it can break through that level because of the second time. But again, if you throw in a trade line, you've got a lovely confluence there. The only way I'll be thinking right now is to trade that short, not long.
Yeah.
But trading it long off the top of a bar like that, I mean, I'm looking at the monthly chart. Let's get a little bit more real, I suppose. I need to see a reversal. And at the moment, I don't see that reversal. Lovely level, again, that horizontal level is fantastic. But to trade this, I need to see price give me a double top or an evening star or head and shoulders, something like that. And it's just not there on the daily chart. Maybe it sets up on the 4-hourly. So that's the sequence I would go through. Looks toppy, but it also looks like it's at support right now. So I've got to see that break and get a lower high. So I've got to see some form of reversal situation before I can even consider it. At the moment, it is simply not there. Now, I do see a few people coming into the room early for them because they believe that the show is going to start started 1 minute ago, whereas it actually started 1 hour ago. And the reason for that, of course, is that London session began 57 minutes ago, and that necessitates us starting the show 1 hour earlier, of course. And that will be the case now until October 29th. So apologies if you weren't on the memo for that. That happens at this time every single year because London now opens 1 hour earlier because of daylight saving time. We have to have, well, we don't have to, but we'd much prefer to catch the London Open than not. So the show will start at, well, it depends where you are. UK, same time, 5 minutes to 8 in the morning. Singapore, Hong Kong, 5 minutes to 3 in the afternoon. And if you're in Australia, it's 5 minutes to 6 in the afternoon. If
Actually,
you're in America, go back to bed. Sorry?
Did George know?
No.
Okay. So he's probably on his way.
He probably
Actually,
he'll be here.
Yeah, he would probably have a bit of a clue though, because he does trade the UK Open. He probably just realised.
Oh, he'll be in shortly, I'm sure. So no drama. Well, look, we'll stay around for a little bit. And those of you who just joined, we'll briefly recap what we're looking at. Phil is telling us that Wednesday is a strong time by degrees day as well. Okay. So what that means, guys, is we'll be looking for some sort of change in market direction. It's not set in concrete, of course. You still want to have something that that gives you a tick on that or confirms that. But, and it's not, okay, Wednesday morning, get up and trade it in the opposite direction than momentum and price has been going. That's not the case. It's simply a matter of we are expecting, because it is time by degrees, that the market will change in some way, maybe in a 48-hour period, maybe in a 72-hour period, but change may well be coming. That's what we're looking for. To me, that could well be this little fella here, dollar yen. As I said, I'm very, very keen on it if it does close above this line and comes back and retests it. So close above today, retest tomorrow, Wednesday, time by degrees. Happy days. We can look to trade that long. And the rest, as I say, I have been through. Euro dollar. Yeah, I don't know where that's going to fit in time by degrees, but again, maybe a little retest today or tomorrow of that level gets me short. Yeah, I'm okay.
Well, I suppose that they'd all be affected, wouldn't they? I mean, it's you know, the fundamentals are going to be something, but if the time by degrees exists, then isn't it right across the board?
Yeah, it's everywhere.
So euro dollar's been pretty buoyant, hasn't it? I mean, it's you know, if you kind of look on a daily chart, I don't know, actually. Yeah, I mean, it's, you know, it's kind of like in a bit of a range, but it is, I don't know, maybe creating a higher low right now, but possible that that we're seeing just a little bit of weakness and we could see a turnaround in that currency.
Yeah, I think it's already turned for mine. What I'd be looking for is a smaller time frame to get that turnaround. You know, that's a big signal. That's also confirming that, in my humble opinion. And, you know, this rally that we've had since June of last year came to an abrupt end at that level, which is around about the 109.50 or something like that. Let's call it 109. And, you know, it wouldn't surprise me in the least. In fact, I'd be surprised if it doesn't come back to retest this level, which is 104 or 105. So, you know, somewhere in here, there's 400 pips available. And if it comes from, you know, the higher it comes up, the better it's going to be. So, you know, that's why I'm pretty keen at the moment on the daily chart to see this retest of this area here. And I think that's my signal to go short. And the chart pattern or my chart pattern agrees with that. It may not be yours and may not be your cup of tea, but that's what I'm seeing. And anybody in the room, if you've got an opinion on any of these things, tell us. That's what we're here for, to be our trading buddies. We're all trading buddies. Gold not doing what it should be doing for us at the moment. We got tipped in by the skin of our chinny chin chin. Is that what it is? Hair of our chinny chin chin.
It is.
Well, skin of your teeth, isn't it? Yeah.
Skin of your teeth. Yeah.
Here comes George.
On time, right on time.
Bang on the money, as always. So we'll be going to George in a minute when he settles in. I think I'll just do a very, very brief my watch list. I won't go through the weekly game changes again. But those of you who have come in an hour late, I know you don't think you're an hour late, and that's cool. But as I say, the time will change or has changed in the UK. Therefore, it has to change for us as well. So trading buddies from now to October 29th will be 1 hour earlier than it was last week if you're in Hong Kong, Singapore, or anywhere outside the UK, really. And that includes, of course, South Africa, where George is. Hello, mate. He may not be ready yet, but he's just entered the room, but we'll get him in a tick.
Yeah, interested to see
how's your watch on the FTSE going?
FTSE just set up, mate. There is a trade long on the FTSE if anybody's interested. It has literally just set up for it. I can quickly show you that before we go to George. Could be a little bit tricky. Let me just do this. Share my screen. There we go. So this is the trade here. Yeah, go on, mate.
No, you give the trade first.
Yeah, so this is a trade here. It does need to get back through this trend line, and what's interesting about this one is it was a little slingshot setup just happened, mate, on the 5-minute chart, which I will show you now. But what we got is this trend line here. We got this gap here, and you're not late, plenty of time to kind of get into this gap here, which came down and was now filled. Nice reversal bar on the 15. You look at this on the 5. Look at this, mate. False break, back through the level, test the level. There's the trade just there. So you'd only be, I don't know, 4 pips from the entry. Now that is obviously going to be an issue. But I'd like to see if this can get back to the highs and possibly beyond. I would suggest that if you're going to be sort of taking profit early, this is definitely one to watch out for. This is the other one to watch out for. So stops at the lows currently would get you half to 1 there and around about a 1.5 to 1 there. So the ultimate target is this area up here, which it may or may not get to. I don't know, but that's what the aim is at this current time anyway. So yeah, it is for a FTSE long, mate. 4 pips below where we are now would be ideal, but if not, I still think it's a pretty good trade if you can get sort of your half to 0.5 to 1 there, and then see if you can actually push back to the highs up here. This is a relatively strong line, but it is only a 15-minute line. So you look at this on the hourly, it doesn't really exist. So just to see whether this bar can turn around. That is a very negative bar, and I appreciate that. But we do also have a broader pattern here in the inverted head and shoulders, which is there, and there. So you're picking it up on the right shoulder here. So that's the trade, mate. FTSE 100 long.
Brilliant. Dr. George, are you free?
I am free. How are you guys doing? I'm kind of hesitating in response because I want to be pretty boring today, but I am free.
Oh
well,
we've been pretty boring as well, so it's all good.
We've been here for an hour because the clocks have gone forward, which you probably didn't realise.
Oh my goodness, have they?
But you can have a quick whip around if you want. I mean, if you want like a quick 10 minutes, then we're quite happy for you to do that.
I mean, 15 years trading and I can never get it right.
I can't get it
really,
right, and I live in the country. I wouldn't
really-
worry too much, mate.
So we opened an hour ago, right?
Yes.
Yep.
Yes. Yeah. But you know for next time.
Well, you know what? So what's good about it is that I'm trying to share my screen. So
Oh,
know
let me
Oh, here we go. This person that's in control just gets it wrong every week, doesn't he? Thanks, mate.
You're welcome.
Well,
I'll have to take this call, guys. So talk amongst yourselves.
Yeah, go for me.
So I was saying what's good about it is that I decided last week, at the end of last week, that I'm not going to be actively trading this week. And the reason for that is, I'm happy with my results through in March so far.
Brilliant.
And what I want to do is, this quarter I've taken quite a bit of trades. I want to just spend this week going back through my charts, my encyclopedia, and looking at every single trade. Well, the first thing I start is off my, refreshing plus or minus 1,000 slides. 200 of those are just on the strategy description, if that makes sense. The patterns that I trade and why I trade, etc. So fully detailed. And then the balance is just the actual charts themselves at the end of each day and say this setup, that setup, etc. So I want to go back again because when I'm trading, I don't have time to actually do that. Just go through each of those 200 slides, and also all the charts that reflect the trades that I've taken in this quarter. I want to go through them again and just to say to myself, did I optimize the business? In other words, the money that I made, was that all the money that I could have made? Or could I have made more? In other words, are there any trades that were borderline in terms of strategy that I took in the heat of battle and I shouldn't have? So if those appear, then I don't want to take those. And everything that I took that is within strategy, did I manage it well? Because so Friday is a classic. I don't in my what do you call it? In my time zone, I cut off trading at 1 o'clock my time. So before the clocks changed, that was 11 UK time. That's when I stopped trading on Fridays. So the trade set up on Friday morning is I went short as market opened. I went short on UK 100, Hang Seng 50, Euro Yen, and I was long on gold. The market accelerated, in my direction, and then it started pulling back. And I'm sitting there thinking, man, this is Friday. Got a couple of hours to get out of the market. Do I wait and then round my stop? What do I do? I say, well, I'm not going to sit through the pullback. I'm out of the market. I don't care what happens. Then I only looked at the chart this morning. I said, oh, well, if it had been a normal day, there was a pullback and then it accelerated down in the direction. So I would have set through that. But I was prepared. I was happy to bank whatever I banked and get out. So now when I go through the charts that I've got, the strategies that I took, I'm asking myself, did I optimize the money that I could have made? Or did I get out too early? Did I think a reversal was setting out when it didn't, or didn't I sit through a pullback? Why, etc. So I'm using that this week to do that. So I am trading, actually, if you think of it, but I'm going through every single chart. But when
is this something that you do at the end of every month, or is it at the end of every quarter?
End of every month, I'm looking at like the last 100 slides, if that makes sense. So I just go through the latest and refresh and say what happened here. But when I get to end of every quarter, for me, that's a biggie. Then I just, especially when you've had a good quarter, you do it just before the quarter ends. If I have to If the quarter has been weak, I work through, like, let's say my results were not what I wanted. I would have worked through this whole week, but I used then the first week of the quarter, first week of April, just not to trade, to go through. Because if I do that, I can make a lot more money in one of the following weeks than in a whole quarter, just by looking at it. That's how I improve myself. So for
how long does it
growing,
take you to put together a slide?
To put together
a slide, when you sort of, like you're saying about sort of you go through your slides, how long does it take to do a slide?
Now it doesn't take long. So what I do, so let's assume this was the 5-minute chart, right?
Yeah.
Then I just do the visual, right click, save as picture, active chart as is. It goes on to MQL. From there, I copy the image into PowerPoint, and literally it's, I mean, if this was a slide, within 15 minutes, I'm done. Because all I'm saying is leg 1, leg 2. So I should have taken a trade here or maybe here. And if I took it late, then why did I take it? Why did I hesitate? I mean, if this is a pattern that I trade, I must execute, and I would have taken that. If, for example, I took a trade and somewhere within here, I decided to exit because I thought of the pullback, I'll be saying to myself, but in the heat of the battle, you forgot this is spike pullback channel until you get a proper reversal and the market looking like the bulls are taking over. You just got to hang in. And what I could have done, maybe I would have probably taken a trade late somewhere within here. And as it starts to kind of go that, I get worried I'm going to start to lose money, which means I'm being too slow to take trades. You take the trade here, then you hang through the channel. So I just make little notes for myself. And if I took a trade here, for example, and that's all I took, then I could have said, but I mean, why didn't I add a little bit more? Even if I scaled back the risk, go at a fraction of it, and then hold on to it. So now, because I've done it so many times, a complete analysis of a slide within 30 minutes is done at the most.
Right.
But when I go through now, here's what's interesting. Now in this week, I open up the same. There's no heat, there's no pressure. I can look at it and say, okay, if this thing sets up like this, if I go and trade it the way I've got on the chart, is this optimal? If not, what am I missing? I mean, I had something. Let me just go to my slides, see if I can quickly put it up. I hope it's not far, that I worked on. You might find it boring or you might find it interesting.
No, I think it is interesting, mate. Just to see sort of, the approach of how you ultimately analyze the mistakes as much as everything else is fascinating. I think it's a really good lesson.
So let me show you this. This where is the PowerPoint? I mean, this is my bread and butter. I spend more time when the chart's open. I can jump in. So this pattern setup, this was last week, right? So I managed to, I took some shorts earlier on, and I got out here, because I thought it was a reversal. So when I went and looked back, there's a whole kind of analysis on that, which I'm not going to bother you on. But what I want to show is this one. So all of this I've analyzed. But then when I came here, I kind of said to myself, I think this was quite late on this day. But I'm saying I had opportunities. I took trade, scalped, took trade, scalped. I didn't take that long, which is problematic. I mean, I've analyzed it way back here as a potential trade I should have taken. But then, I sat down and I said, what happened here? Why were we late to jump into the market? Why do you jump in way down here? This is George talking to himself. And I said, okay, let's sit down. Let's see if things formed here that I should have picked up. And the moment I slowed down, it's all over the place. This is the way that I trade, because when I start to look at this is a macro wedge. I think I've mentioned to guys that, you get wedge patterns which just form. You probably could be sitting and saying, well, 1, 2, 3, pretty easy to see. but a macro wedge is a bigger pattern. So there was the first attempt by the bulls, failed. Second attempt failed, they created a double top. Any failed breakout above a double top creates a wedge. It's a third push, right? So 1, 2, 3. So there was a third push. Now, because I saw, I in and out, and I saw that, my mind just kind of blinked out and said, well, I'm going to wait for it to kind of set up nicely. And by the time it's down there, you're taking a trade, which is still fine. Your stop is out there, you make a bit of money, but all the money was here. So I go back and I say, okay, let's look at this. What is in here that is normal? And everything was pretty normal. So we get a bull micro wedge top. Now we're talking about this point number 3 here, analysis of macro wedge number 3 point. I just called it a complex major trend reversal. It is a trend reversal. There was a bear breakout. All of this is just part of a trend reversal. Now, when you're looking at this number 3, deciding, should I be looking to sell, or am I going to just let it go and maybe we'll get a double bottom here, which you could have, there's always that probability I'm going up. But I see there, by the time we get to this third point, there is a micro wedge here. If you look at A, B, and C, at this level, which was a double top, bulls tried once, failed, tried again twice, tried again third time. That should have been an alert to say, hang on a second, there's a failed breakout above the double top. So before we got all of this beautiful stuff right here, I should have been alert. I should have probably stopped, taking scalps everywhere and just wait to see how this set up and, look at jumping into it. Because it was a long day, happy to stay in the market and trade. But anyway, so a bull micro wedge top ABC, which is a failed breakout of the double top. So already the bears are building up momentum. Then we get an inside doji. So these numbers correspond to what I've got here. Bull inside doji again is telling you the bulls have a problem. If they had been repulsed 3 times and they're strong, they must give us a bull trend candle and start to work to create a high low double bottom. And you see those quite often, where they end up with a high low double bottom and it accelerates up. But we didn't get that. That inside doji is breakout mode, so it's confirmation of the failed breakout. So right at this point, we already have a confirmed failed breakout. To get a doji, you always expect, that's me, I always expect after a doji, it's a trading range, failed breakout at the top or failed breakout below. So the third candle becomes that number 3 rather, becomes a failed breakout above the micro wedge top. So failed breakout above here. That just confirms that the bears are there. There's bear forces in play. Then you have number 4 candle out of nowhere. After this bulls going up, you have a beautiful bear trend bar, the best bear trend bar since we were here at the low of yesterday. So the bears are showing strength, but it's not good enough for you to trade as yet. But now you have a distinct top, right? So I'm saying, okay, so now that's a distinct drop. Let's wait and see the usual stuff, breakout, pullback, low 1. Let's see how we get it. We get a doji, that number 6, which is a perfect inside doji. Bulls have failed, they follow through, okay? So doji, bull tried to, on this candle, tried to go up, failed. Now we have a doji. Then we have number 7, another bear breakout, and the largest bear trend candle since the low of yesterday. Now, all systems are clear. Now for me, I've got to wait for, a nice reversal candle or a reversal pattern that is tradable. Then also something else you can see, if you look at number 8 here, lower highs of 3, 5, 6, 7. So right here, these lower highs confirm the micro bear trend. So right in here, we already have a micro bear trend. Then this bear candle is just confirmation of that. So the bears are already controlling the market. Then we have a pullback here in the form of a convergent triangle. And this bull candle here was the inside candle that the bulls could have accelerated above, but they failed. We have a convergent triangle. At this moment, when you see that, then you start to sell. And literally,
interesting, mate. Interesting.
Selling there, sell the close, sell. All of this should be sell. I mean, this would have been just a real beautiful setup.
I love it. Do you know, it's interesting because I look at that and my trade's on 9. Everything exactly the same up to the point where we get to that bar. But 9 would be my test of the previous close, a bullish close, if you like, and fail. So,
Mine's on 8.
Yours is on 8.
I'm underneath 8. Yep.
So you would have sold here.
Yeah.
You guys would have sold here. You see. So
retest.
And I would have waited just a little bit and sold here.
So why would you sell? Why would you sell there, mate? Why? Yeah, it's the same trade. Exactly. We're all selling in the same area. But why? Why was that the information rather than 9 or the break of 8 that Jeff said?
So this is confirming for me that the bears are strong.
Yeah.
Okay. Everything in here that has set up this is a reversal pattern, but now I want to see the strength. So once I see this is my bear breakout out of this pattern. This is where I'm kind of saying, now I'm waiting for the breakout pullback low 1. So, taking that trade, fine, stop up here, taking that's a low 1. All of these I could take, but I classify them as, I just call them LPTs, low probability trades, because I'm just waiting for that final move. Now we've got a converging triangle. Sometimes you get a nice gift. It's a decent 2-bar reversal, one of those classics that we all know. Then you just sell off there. So why I'm taking this is, having seen enough of these, there's always a chance that if I take any of these, it still pulls back and gives me a double top or a lower high. So I get an even better entry. That's why I kind of just wait to see. So my mind is kind of prepared. I might get the bulls might have broken out above here, and I get a 2-bar reversal. I'll take that. But because they didn't do that, that's a trade. So within here, I'm looking for the trade. I'm just waiting for that. That's why I'm doing that. Yeah.
The confirmation, yeah.
So to your question, now the full analysis, like this doesn't take long, because once I sit and I look at it, I can see things clearly. So when I'm going through the review of the charts this week, I'm just reinforcing to myself that we trade patterns, George. This is what we trade. We got to see it, and when we see it, we got to execute. And when I'm taking short here to here, short here, I'm kind of straying, to that border of just let's just take it. But that's not. I don't like to scalp. You know what I mean? I want a swing trade. So I got to reinforce to myself, you're not a scalper. Let it go. Wait for it to set up.
My favorite thing about this, George, is that I think as people we forget that that we need refreshers. Even though we think we know information, and I think about with piano is an example that I will use just because I play it. But with a piano, if I don't, as any piano player or musician would tell you, if you don't continue to practice scales, even though you know what the scales are, they kind of leave your fingers a little bit. You're not quite as quick with them, and you're not quite as solid when you're sort of like keeping the timing. So you always need to refresh and refresh and refresh. And what I really like about this is that everybody that's trading knows their strategy, and probably believes they know it very, very well because they're trading it every day. But actually, it's this stuff, because I play scales every day within a piece, but it's not in quite the same way. You don't break it down in the same way. But it's this stuff, the refresher, that kind of like gets you back on track. So you are able to do what the person that taught me to trade always said to me. It's about rinse and repeat. And we don't rinse and repeat because we make mistakes for emotive reasons, or trying to chase money some days or months because we might have had a little loss or a big loss, who knows. And it's this that kind of brings the discipline back. So that's my favorite thing about it. The fact that you're breaking down the bars in a specific way, I don't think that's necessarily the relevant thing for everybody. The relevant thing for everybody is that you've got a process that takes you away from actual trading, even though it is trading, as you quite rightly say, and it just kind of it's a reset button.
Yeah, I mean I think it's part of the discipline to actually say, like, I'm not trading for 5 days. I'm not executing trades, but I'm trading by doing this because I know by the time this week is done, I mean, you probably know the way my mind thinks. I've already figured I'm going to put 100 hours into this, which is like probably 2 weeks of normal work for the normal guy going to work, right? But I'm going to put the time in, because when I start to execute trades in April, in a day or two, I can make more money than I could make in a month without doing it, if that makes sense.
Yes, it does make a lot of sense.
So when I say day or two, I don't know whether it will set up on the Monday or Tuesday, but it might set up on the Wednesday and then the following week. But if I look at the aggregate of that trading, I will make a lot more money than just continue to blunder through and just hope it comes together. So this for me, so every quarter there's a week that's dedicated. It's just either the last week or the first week. Then every month it's usually it's got to be like at least 1 or 2 working days plus a weekend. That's part of my deal with the family, that they know here comes a weekend of education, and I just take myself through that discipline.
That's brilliant, mate. Can I ask one more question?
Yes,
I'm sure Jeff probably wants to ask something. Why the last week of the month? Why not the first week of the next month, or the middle week of
So the first week of the month, I'm a lot more aggressive, right? Which sounds funny to someone who says I trade strategies.
Yeah.
But the first week of the month, the first couple of weeks of the month, I'll execute relentlessly every strategy that sets up, because I know I've got a buffer still.
You can make it back if you get it wrong, right?
If I get it wrong, I can still build up. I still have my disciplines. Like I take out of my bucket of cash, 2.5%. That's what I'm going to have. And then I allocate it to trades as I go. So that's managed, but I'm a lot more aggressive. When I go through the middle of the month, I kind of say, where are we with the money we're supposed to make? And if things are looking good, then I just start to be more clinical than otherwise. When I looked at last month, or this month of March, and the quarter, I report to my clients, who are copy trading me every quarter. So I look at the end of the quarter, look at the month, and by Thursday I was pretty happy with the returns. I looked and I said, I trade Fridays, but I'm going to be super cautious, because I don't want to give a portion of it back and then have to start working through. So when I saw those early trades, that was pure scalping. Got in, move, didn't wait for the pullback, got out, and I said, that's it. We're not trading, done, finished. Literally closed the chart, didn't look at anything. Didn't want to tempt George the trader until this morning when I opened it. And I said, that's it. I'm not trading. I'm happy with the results. So where the results are is an indicator. If I needed a little bit more, this week is clear. It's a beautiful week of five days to trade. I would have allowed myself to keep trading, but I was still kicking the discipline. I'll have to do it the first week of the month. Those 5 days. Remember, this is a quarter now. The quarter is a full 100 hours, 5 days plus of weekend. Monthly to just be a few days. So that's just that for me works. I've got to do that. It's part of what I call the business, right?
Yeah, love it, mate. And thanks so much for sharing that. We must close the show down, because we're now half an hour over, and we might get some sort of message from YouTube. I don't know, but
thanks for letting me in.
Oh, mate, no, that was brilliant, and well worth it. Go on, mate. You were going to say something.
Yeah, sorry, I missed half of it because I had to take that phone call. I did hear you use a word there, George, which is the worst 4-letter word that I can think of in trading. It's called hope. And if you get into a situation where you have to hope, you've got a problem. You need to be out of that trade very, very quickly. It's not about hope. It's not about wishing. It's not about anything else other than clinical execution. And I think, since I've known you, you're probably one of the most adept people that have been a clinician. So I don't think that the word hope doesn't enter your vocabulary. I think that's the one I was trying to say.
Yeah, not
so
as
thanks
far
for sharing.
Is concerned. Absolutely not. It's you got to be ruthlessly clinical.
Yep.
That's the only way. At least, if you say you trade in price action, if you trade in other strategies, it's a different thing. But if you trade in what sets up, you gotta wait for it, and when it sets up, you just gotta execute. Yeah.
Love it.
Yeah,
Okay.
I think we've all sat there and said, "Oh, I hope this goes there. I hope that goes there." Early in the piece, and once that four-letter word enters the equation, as I said, get out real quick, because that's not where you need to be. It's a bad place to be when you're wishing and hoping. All right, now just repeating for those of you who have entered after the start of the show, which of course was 1 hour earlier this week than it was last week. If you aren't in the UK, of course, that will be the case until October the 29th, because we coincide with London Open, and London Open is now 1 hour earlier than it is normal because of daylight saving, that wonderful three-letter word, DST. Terrible, terrible thing in most places, in my opinion. But some people like it, especially if you play golf or anything like that.
Yeah, that's why it was come up with, wasn't it?
Yep, exactly. Actually, you know where it started?
Okay. I didn't know that.
It's started in Paris.
No, New
So
Zealand.
it's Benjamin Franklin, wasn't it?
Oh, Benjamin Bum. It started in New Zealand, I'm pretty sure. Okay, there's your research. There's your research subject.
Just to let everybody know,
Thursday.
it's 3 p.m. Sing time. We now start.
Yeah, 2:55, in fact.
2:55.
And of course,
yeah.
If you're in Australia, that's 5 minutes to 6. And if you're in Venezuela, I wouldn't have a bloody clue. But if you're there, you're working out, I'm sure. Okay, just very, very quickly, potential setup on the euro. I will share that with you before we go. If I can find the right button to press, that is. There we go. All right, it's not now.
3 a.m. in 5 to 3 a.m. in Venezuela, mate.
Brilliant. So that's why we don't see Orlando too much. It's a little bit early for him. All right, euro. We spoke about this earlier, and my directional bias on euro is short. But I'm looking for a retest of this level here, the 108 handle. And we may even get that opportunity very, very shortly to trade that. 30-minute chart is showing me a potential false break of this support trade line. I would like to see a close better than I can see at the moment. So I want to see price maybe even take out this high. That would be good. Close here somewhere, then pull back and retest the confluence area. Pivots, trade line. There's probably even a horizontal level there as well, but I'm not concerned about that. Trading long up to 108, so 30-minute time frame, you'll probably get a 1.5, 2 to 1 if you're really lucky, if you get the right candle. I don't know I want to go too much past there, but maybe DR1's your target area in this vicinity. So if that does set up, what I want to see, price to here, back to here, then you can trade it up to here. That's euro versus the dollar. Short bias for the week on Euro Aussie. I'll point these out very, very quickly to you. Euro Aussie, Euro Kiwi. Sorry, there's Euro Aussie, because I think we're at an overbought scenario, looking for a lower high in here. Euro Kiwi, exactly the same thing, looking for a lower high in here to trade it short. Pound versus the Aussie, exactly the same scenario. We're at a strong resistance level. I pointed those out earlier. There's history across here. Looking for a reversal, lower high, short. And the last one, very, very similar, is pound CAD. Exactly the same scenario. I think pound CAD is probably the best of them because of this confluence. Lovely, lovely level horizontally on that. The trade line is self-explanatory, so I'm looking for a false break underneath there and trade it short, probably only down to here, but I think that's probably one of the best of them, pound CAD short, if it does set up. That doesn't mean you jump in and go short pound CAD, right? You've got to wait till it sets up. And that may well be on Wednesday when, as Phil tells us, it is time by degrees, which means we're looking for a reversal of what the current momentum is at that time. Now, don't be fooled by that. It could be a 48-hour period, and in particular, if in the Northern Hemisphere, if we're saying Wednesday, or Wednesday is probably Thursday for you. So just be aware of that. It may not happen precisely on the tick of the clock, and it very seldom does. You're looking for a setup. Trade the setups at the appropriate time. That's the way it should work. Right, guys. Last thoughts before we go.
Well, just I think rewatch what George has just been saying. I think that is just a fascinating 20 minutes that he's just covered. And I don't know if you need to go anywhere else to be inspired by an approach, then I don't know where that is. You know, I just think that was just a brilliant 20 minutes. And I'm going to be watching it really back again, George, to be quite honest with you, because I have actually taken quite a lot from you being on the show when it comes down to doing my journal, and just seeing that some of the other little bits of detail that you've put in that I hadn't considered. I think is fascinating stuff. So thank you for that. But yeah, my final thought would be would watch 9 till 9:20. Forget the rest of the show, but watch 9 till 9:20.
Okay, I'll be doing that because I did miss half. But George, when can we see you next, mate?
Well, Wednesday live trading profits is on. So the times are still the same, 18:30 Singapore time for 15 minutes. And for the guys who are on the subscription, we are trading 4 hours in the day, Hang Seng open, as well as middle of the day, which is just 15 minutes after that live trading profits, we in for 2.5 hours. So we'll still be looking at the markets live, even though I'm not actively trading, look for opportunities, setups, etc.
Excellent. Righto. So if you want to learn more of how George does his thing, Wednesday is the day for you. For us, we will return on Thursday at what time, Ash?
We will be here at 5 to 3 Singapore time, or 5 to 8 UK.
Don't you be late, right? have a great week ahead, guys. And sorry for those of you who joined a little bit late today. I understand because of daylight saving in the UK, but you know what he said, 5 to 8. Don't be late. Have a great week. We'll see you on Thursday. Bye-bye for now.